Well, if today's news flow is any indication, it would seem as if Wall Street's deal machine may be in motion again. Are we seeing the beginning of a turnaround or just a flash in the pan? We put that question to someone in a unique position to comment. Our next guest established his own investment banking firm in 1989. The firm has since performed financial and strategic advice to more than 350 companies. Peter Solomon joins us now. He is the founder and chairman of the Peter J. Solomon Company. Welcome, Peter. So glad to have you in the studio with us. You speak with tons of companies, obviously domestically, internationally. Do you pick up any change in tone for the better?
Not much. I think what you have is strategic buyers. Companies always have to be looking at deals. There's not enough growth in the Western economies to accommodate the type of earnings increases that companies want to get. So they're constantly looking for new brands, new outlets, new financial institutions are merging, media companies are merging, and so you have a constant flow.
Meaning they just have to be smarter about the way they do business in the slowing times.
Exactly. They're more selective, and they're not quite sure of their stock prices, and it's harder to borrow money, and then not quite sure of their earnings, and they have more volatility, as I say, in their stocks. But there's a constant beat within the economies of the world to make acquisitions. And there is one phenomenon that does occur when you, and you're alluding to it, when you begin to have some acquisitions or specific acquisitions in certain fields, then other companies feel they have to be competitive, and they do ramp up their activities more.
I would assume that financing available is dictating what kind of deals get done these days as well. What kind of credit can you get? Do you have to go to banks? Can you go to the credit markets? What can you do?
Well, credit is definitely more restricted than it was, and it's hurting LBO funds and financial buyers. So financial buyers are not serious factors in today's world. Last year, the year before, the last 5 years, they were the dominant factors. But companies have very strong balance sheets today. Not the financial institutions, but operating industries have very strong balance sheets, and they can get credit.
Do you see a lot of Wall Street shops, I mean, we're talking about them freeing up their balance sheets. Do you think it's to the point where they're encouraging corporate buyers right now, corporate borrowers?
No, I don't think so. I think that the deleveraging of the world's financial institutions is in the middle. I think somebody said the other day it was the second or third inning, and maybe the fifth or the sixth, but it ain't the eighth.
Well, we are focused today on a lot of corporate acquisitions, and you talked about strategic deals, but the deal tables do show buyout firms are still active, just on a much smaller scale, it appears.
That's correct. They can get leverage on smaller deals. Occasionally you do get larger deals, but day in, day out, you're not getting 7 times leverage. You're not getting covenant-light deals that were prevalent in the last 2 years. What you're getting is 3 or 4 times leverage. You're getting smaller deals.
What do you think happens right now? Obviously, interest rates are low. What do you think happens to the momentum, if there is any? It's, I guess, a point of argument when they start to go higher, the interest rates.
Doesn't help. Period, it doesn't help. But I don't think interest rates are determinant, nor are currencies. You know, everybody thinks there's going to be a flood of foreign buyers because of cheap real estate or cheap companies or cheap dollars. It doesn't actually work that way. You get more tourists with cheap dollars. You sell more apartments in New York City with more dollars, but you don't really get more companies being acquired because the dollar is cheap.
We only have about 30 seconds left. How hard is it to sell deals to boards these days?
Well, it's a very good question. They're very concerned about their own businesses, and the hardest thing about selling a deal to a board is their own concern about their own managements and how well they are doing. If they're confident about their own managements and confident in how they're doing, then they're probably equally confident about making an acquisition.
So risk on both sides of the deal is being considered.
Absolutely.
All right. Thank you very much for joining us today.
Pleasure.
Thank you. Peter Solomon there, the founder and chairman of Peter J. Solomon.